The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Okay. Here we got the S&P 500. Obviously, we got the downturn here. Have lines here showing past price levels. That the price kind of danced around this particular price level in the past. During this downturn, you see the volume oddly increase. More volume on the downswing than during the uptrend. In fact, during the run up, if you were to draw a line of connecting these peaks, you'll see the volume was actually decreasing as the price was rising. And this period here starts around Christmas in 2018. Okay. But the selling or volume, in this case, picked up as the price started to decline. Now, when we started going north, the volume didn't follow. This is called divergence, when your oscillator moves in the opposite direction from the price. Price eventually follows volume and momentum. So prices can be divergent for a long time, but at some point, price is going to follow momentum and volume. The significance of this divergence also is if people are losing favor and the stock starts to decline, there are no heroes to step in and save the day. There are no white knights, as we say over in this side of the manosphere, to step up and save the day. So that's how you get prices declining big like this. That's why this fell, because there was declining interest. Okay. No love, less love. Less love for the S&P. All while this thing was rising, and this, if we go back to 2009, this was the greatest bull run in the history of markets. And in technical circles, we always call this the bull run that nobody loves, because there wasn't that much excitement about getting in it. So when this thing starts to fall, reach its technical limit and start to decline, you get this. You get that. All right. So I'm saying that this is the ceiling. We go over from here. As I talk about this on my page, maybe to my own detriment, I make it sound simple. It's not. The people on my Patreon site, they know I can go 45 minutes breaking this down so many different ways, and I do. I do it on videos on my channel that you guys don't see on the Patreon site that you guys don't see here, and I also do it in individual one-on-one sessions with Patreon members. I mean, I will go for an hour. I mean, some of them I have to remind them, you got to tell me when, if you busy, if you got a cutoff point, because I can go. It can be a 2-hour dang on chat on the chart. Okay. Okay, I'll explain it a different way, and I'm egotistical about my capacity to convey information. Okay, it's personal with me. So my ego gets involved. You tell me you don't understand something, it's my fault. Damn it, you gonna understand it because I'm gonna come up with the way. It's not your failure, it's mine. You know. But anyway, I'm just committed like that when it comes to imparting information. Anyway, so yeah, so here we got the price return to that favorite area, and then it ran out of gas. It died, and we got a symbol right here. Patreon members, I checked that best of list that I sent you, where I explain what this is. Okay, or I say it all the time, but this is one of those key ones, and you see it here, here. It's a warning of direction change. So yeah, it's really not much to say. I could be wrong. It could go higher. It's not likely though, for a lot of reasons that would take me about 45 minutes to explain. But if it does, then hey, party on. So this going above this line would be encouraging for a bull run to continue. Dropping below this line would serve as confirmation, basically, that this is over and we're going down. Okay. So we're probably not going to get a resolution one way or the other this week. I don't think we're going to get a resolution tomorrow. We may end tomorrow right here, right at the cliffhanger. I don't know why markets like to do that, but they, seem to end on a cliffhanger every Friday. Friday psychologically is a key day in markets. In bullish markets, because of fear of missing out, aka FOMO, people leave their money in over the weekend because they're afraid that the market's going to pop higher. It's going to open higher Monday, and they don't want to miss it. So they leave their money in the market on Fridays. In downtrending markets, people take their money out because they're afraid of what could happen over the weekend. And the market could open up Monday with them down a huge amount. And if you remember during that bear market decline, we had 8% Mondays, when market would open up down 8% on a Monday. It's nothing you could have done to prevent it. Once you left your money in there at 4 p.m. on Friday, you were sealed to that fate of whatever would happen on Monday morning. So optimism makes you keep your money in over the weekend, and pessimism makes you take it out. So tomorrow's close, especially the final hour of trading tomorrow, will be very key. That's why you'll hear them on CNBC. They'll say it's 3 o'clock. It's the all important final hour of trading. So everybody knows what that means. Now you know what that means. All right. Let's see. And that's really all I wanted to say about the S&P. I wanted to spend the rest talking a little bit about Mr. Buffett. I want to put this in here. This just kind of appeared to me. It does look. Hold on. Crap. Come on now. Looks to be right. Looks like it's a prove it line. Got a little support. So the bottom gonna fall out this damn thing in a minute. So maybe I could be wrong about that. We could end up going below here tomorrow. This is gonna be interesting to watch because we're right on it, and it's 10 minutes to 4 right now. So it's gonna be very interesting. All right. The other thing I wanted to discuss was some articles earlier in the month. Um, I bring my brother Lionel in while I chat on this. Um, the I have a little, I guess it's kind of a war, if you will, against the FOMO crowd, the buy and hold crowd, the dollar cost averaging crowd, the people that say, you can't time the market. I'm like, what do you mean? technical analysis is over 100 years old. What do you mean? People time it all the time. You have a certain class of people who continuously get rich in the stock market, and you think that they're not timing it. Of course they are. You bring people on your television shows to explain price action on charts. That's timing it. If those people, if what they had to say didn't hold water, they wouldn't be able to come on TV repeatedly like that. The fact is, their guidance is valuable. Now, timing the market doesn't mean guessing the exact price. Okay, in technical analysis, no, I'm not going to say that I can't tell you the exact price. I'm not going to be so arrogant to say that no one can do it. There are people out there that know things that I don't know, and someone may be able to. Okay, but can we pick a zone? Can we pick a zone to show where the probability of it going much higher is so low that you should be more concerned about protecting the money you've earned as opposed to earning more? You should be protecting yourself from loss as opposed to worrying about pursuing additional gain. Sure, technical analysis is excellent at that. So yeah, I have a little undeclared war on them, and they like to tote out Warren Buffett. As though Warren won because he's the richest doesn't mean that he wins the most. Okay, he had the most to start with. Okay, and he loses more. He has losses too. Okay, so as you see on this page, I googled Warren Buffett dump stock, and here February 18th. This article came out on February the 18th. This link I'm about to click on. The peak in the market, the all-time high for the S&P 500 was February the 20th, 2 days after this article came out. And so this article here talks about Warren selling. So that's for the crowd. It says that Warren never sells anything. And so this link I'm clicking on is about I don't know if I have this one in the let me put this here. I'm gonna throw this in the chat. Now the other articles I'm going to get to are in the comment section below the video, but I don't think this one is in this. What was I trying to say? When you own 10% of a company, by federal law, you must report your transactions because you control such a large volume. You can damage the share price. You can cause a thing to decline if you sell too much. If just one whale, one large stakeholder decides to liquidate, that you owe it to your other shareholders and stuff to know what you're doing. Especially government wants to know if you're out here making comments against it while you're selling it too, and you own a large share. So it's really put in place to protect us and the other shareholders of that stock. So when the market was making that final rise to historic highs, Warren Buffett, being the smart man that he is, he knew that it was time to get the hell out. Okay, so that's what I got to say to the buy and hold crowd. Warren dumped $800 million worth of Apple stock. And he went in biotech and groceries. And what has been rising, you can think pharmaceuticals for this too, and groceries. Money rotates from tech and to the boring sector, the consumer staples sector. Think your basic necessities you were told about in school: food, water, shelter, that kind of stuff. People are going to buy their high blood pressure medicine no matter what. Okay, their diabetes medicine or whatever else they need. Those are non-discretionary choices, decisions. You must buy that. And so money, people save the money that they've earned in Apple, which Warren made money in Apple. He sold $800 million worth, and he rotated it to these safer sectors, okay, because he knows the playbook, and we talk about the playbook on my Patreon site. My people know the playbook too, so they're not surprised by any of this, because long before Warren Buffett ever sold the stock a year ago, I said this would happen, that people would rotate the boring sectors, the grocery stores. Remember way back when Amazon, on the Black Brain Trust, I explained the brilliance of Jeff Bezos when he took some of his money and he bought Whole Foods, because he was rotating money to the staples, consumer staples space. He knows, I'm sure he has people on his staff that advise him to know how to read charts, and they are much better than Dollar Will, okay? And he knew that that sector was in trouble, okay? And he had to move that money. And so this was a smart move for Warren. It was a smart move for Jeff Bezos. That's the playbook. That's how the whales roll. And in technical analysis, we watch charts and we can see we learn how to discern where the money is moving. We don't necessarily know who is making the transition from one sector of the economy to another. We don't know why they're doing it, but we can see that they're doing it, and that's all that matters to us. Okay, so you can look back and listen back to past videos over the past year I've made. Listen to past Black Brain Trust programs on Fridays when I was there. You hear me sing a chorus every week, and so now it's happening. But so yeah, there's no hodling. There's no safety in ignorance or apathy. Okay, there's no way to set anything to autopilot. We have to think. We have to use discernment. We have to adapt to the environment, or we die. Okay. All right. This article was written April 10th. Okay, so the previous article was Warren saying, or proving that Warren was exiting the market before or as it was topping. So he was a part of that diminishing volume at that point. Okay. Now that doesn't, I don't know at what point he got them all out, got everything out. And so this article was published the 10th. So the move up started March 23rd. And so this is looking backwards, that showing that he wasn't even really buying into the rebound of the market. Okay. And so that's that downsloping volume I showed you there, that the whales were not participating in that in this 50% bounce off the bottom. Okay. They didn't have no love for it there either. What's that market crash? So at this point, it was 20%. We eventually, today, we're at the 50% point. All right. So I'll let you guys read all the rest of this. This article is from March 13th. I should have done this. Oh, this is good order. March 13th. So the market decline was on March 23rd. The bottom was March 23rd. It hadn't happened yet. And Warren announced, while prices were falling, that I won't be selling airline stock. Okay. He said that according to Yahoo. And this link is below the video. Okay. This article is April 16th. So, and this is Warren losing money. So he doesn't even, because he owned a lot of oil, and we know what happened with oil. Okay. And he lost money in those airline stocks. Let me see. Finance sector ETFs. I think there's a breakdown of what he owned. A chart. Yes. What he lost: oil, 67%. United Airlines, 63%. Delta. Okay. So Warren, he loses money too. He's just got a lot of it. We can't afford to follow him like that. You know, Warren got his playbook. Your playbook is gonna have to be a little different. Selling May and go away. That's a common axiom in the industry, and we are about a week away from May. So everybody's heard that song, selling May and go away. So it's an article about that. And this is Warren's guy, his right-hand man from April 17. Why Charlie Munger isn't buying in the wake of the stock market crash. And they're telling you on TV how cheap things are. You really got to learn how to read these charts. Yeah, I'm missing one. There was another one. I can't find it. That showed that Warren now, although he said he won't be selling airlines, there's another. Let me see. Let me see if I can find it. I'm going to Google this. I'm going to find it. Let's see.
Hello.
Yeah, what's up, brother?
Good, yourself?
Good. Hold on a second. Actually, I mean, it's here. I don't even have to click on it. What I wanted to show you guys, it's in this same Google search, Warren Buffett dumps stocks. You come down to this, he sells airline stocks. Okay, remember now that article from March, early March, he said he won't be selling airlines. April 6th, Warren sells airline stocks. Okay, then Warren Buffett really sell these two airline stocks April 4th. Okay, all right. So, you can, hear what people say. It's more important to watch what people do. So even Warren Buffett, you have to kind of use your discernment, even with him. So what's up, brother? How these streets treating you?
It's good. With Warren Buffett, I know he bought. I read a few articles where he bought Delta Airlines a few weeks ago, and he turned right back around and sold them at a loss. And I do agree with you. A lot of us people shine the spotlight on Warren Buffett as to say this is what you do, but what he does, yeah, on the surface it looks like do what Warren Buffett does, but what he's buying is different from what you can buy.
Right.
He purchases preferred stock, which means he's going to get a guaranteed dividend even after that company cuts dividends to us mere mortals. So he's getting a continuous dividend, and on top of that, I was listening to one guy break it down where the deal was he gets a guaranteed percentage over X amount of years, and even if the stock goes down, he'll be able to sell those shares at a certain price, even if the stock goes down below. So basically, if the stock goes below arbitrary number here, $10. If it goes down to 5, he can still sell it at 10. But if it goes to 15, he can sell it at 15. So
wow, yeah.
What he's doing is different than
right.
what we're doing.
Right. People need to also just a basic thing. He's like billions and billions of dollars. I mean,
right.
He's got more billions than we have tens of thousands. Okay. Right. We're not even 10,000 there. A lot of people are not. And Warren has more billions than he can stack more billions higher than we can stack units of $10,000. Okay.
Right.
And so he kind of is the market. And with that amount of money, when he decides to buy and sell is different because he has so much so many shares that he's trying to accumulate. So he needs to buy while it's declining, because he will end up bidding against himself.
Mm-hmm.
Because so when we get close to the end, he needs to buy while it's going down, because he's controlling a fund, and they're thinking, decade into the future. And so for him to get that large position, it takes him a very long time to move that amount of money into the market. Whereas you and I, regular folk, we can move our money in and out of the market with one click. He can't do that.
Right. He can make or break a company.
Right.
Period. And that's one of the conundrums of being filthy rich. Yes, you got all this money, but you can't move.
Now, here's the beauty of technical analysis. When you do start moving, you trigger our oscillators. We don't know who it is, but we know it's some people with a whole lot of money. And so that's what gets our attention. And so we respond off of just that data. And the fundamental data about earnings and stuff, that comes later. That information, the logical explanation, usually comes months later. By that time, you've already lost a significant amount of your money.
Right.
You cannot wait for the news.
Right. And that was
like it's raining outside. Do you go get your damn umbrella, or do you turn on the TV and see what the weather is?
You get your umbrella.
That's right. That's right.
Yeah.
Go ahead. What were you going to say?
No, I was just ending on that. That's the conundrum of being filthy rich. Yeah, you got freedom, but you really can't move too swiftly.
Right. Well, that's kind of all I got for right now. I gotta do some more studying on like marijuana and some of the other consumer staples. I want to be sure before I say, there's some safer places to go. The other thing, it says let's look at the bearish ETFs while I'm here. Let me bring this up. The one that called the Vegas bet, you'll see on the channel here. I call the Vegas bet. Okay, let me go to so when the market was making that historic rise, this thing was getting destroyed. It's called TVIX. It goes up when the market is going down. It invests in the futures market, which is complicated for common folk. So, of course, this being American, capitalistic. So they created this vehicle so that people can, common folk can get a little bit of the gains that people earn in the futures market. But this is incredibly risky, crazy risky. It does not always do what we think it should do. Okay. So I say that, make sure you know that it's incredibly risky, but damn, if you get it right, if you time it right, you had this high right here. It went down and made the ultimate low here around, let's say, $39. All right. And then it took out this high and went to exactly $1,000. So from $39 on low on February 20th, which was the high in the market, and during that big decline in the market, it went to $1,000. Then it came all the way back to a low right here, which kind of corresponds with this kind of price action level here, and it found the bottom, and it looks like it's ready to run. And so it found the bottom around a little bit under $200. Let me see. What's this low say? 194, 195. Okay. That's so this is the volatility I'm talking about. To move from $40 to $1,000 is great, but to move from $1,000 down to 194 is painful. This is nothing to play with unless you are a technical analysis student and you have money that you are prepared to lose. This would be money that you would take to Las Vegas and call it fun. You know how you guys. I say you guys because since I started trading, I don't go to no gambling spots. That's not fun for me anymore. But I remember I used to go to Vegas and take like $2,500 and plan to lose it and call that fun. There's nothing fun about that to me. I can't do it anymore. But yeah, so it would have to be that kind of money, discretionary money that you're planning to lose and call it entertainment. So that's the amount that you should put in these things. And these are not set and forget. You have to, like I said, you got to know how to read charts and you got to be on it. Because look at this. But it's still great. Even buying at 40. And now we're getting ready to go for the second wave higher. Going from here, going from $40 to $195. That's not bad. That's still, I mean, hell, I would take that. I'll take the rise from 40 to 195. That's a good win. Okay. But it's going higher. In my opinion, it is going significantly higher than $1,000 even from here. Okay. So it would not surprise me if this thing doubled above 1,000. Okay. And let's look at I don't remember the short oil one. This is this is it, drip. This is it, right? Okay. So you had this thing. So again, this goes up when oil goes down. So we're talking what the heck is this? 51. Pretty low, $50. Okay. Wait a minute. This is my first time seeing this, y'all. From $50 to $715. Good Lord. All right. So this is how people are making money. Okay. While the market is declining. All right. But you got to be a technical trader to know this. You wouldn't even, your mind isn't like programmed to even think this way until you get over to that side, the technical side, and learn these different ways of thinking. Because it's definitely non-standard. So this low here started at $25 back in October of 2018 to go from $25 to 720. That's amazing. But then here's that volatility again. You got to be able to stomach the thing coming back down to $196. Okay, so which correspond with this little peak here. All right, so it's rough. Then you got TCA. This is a small caps. This is betting that the small caps, the smaller company stocks, betting that they go down because a lot of the smaller companies are in danger of going bankrupt with if they're not making money. They can't pay their salaries of workers. They don't have the credit to even get a loan for it. All right. So some of that, when the government was talking about buying junk bonds, the bonds are loans. So if you're buying corporate bonds, you're loaning money to a corporation. If you're buying a treasury bond, you're loaning money to the federal government. If you're buying a municipal bond, you are loaning money to a state government. Well, the corporate bonds would create a cash flow for these businesses to stay open because most Americans work for these smaller companies. Okay. So anyway, but this is a bet against them. All right. And so this low here, just the idea is about $33. Okay. So it didn't do as quite as well the other, but it still went up to 120, 33. But then you got to be able to deal with this ride back down to $40. All right. So it's rough. So with that, this is some of the ways. These are some of the ways that people are making money. And you see this volume looks nice and healthy too. You know, so this big money here, and it's getting ready to run again. But that's the kind of stuff that I get into. Hold on a second. That's how I get down on my Patreon. All right. I'm so busy on that site and with my own personal trading and my own education. I don't know everything. There's a whole lot about this trading thing I don't know. And so I'm just trying to pass on my Patreon group what I know, to get get them kick started, and as they make their goals to find out what they want this thing to be, this knowledge, what they want this knowledge to do for them. You can become a full-time trader if you're really good at it. You can be a day trader and part-time, and or swing trader, trading intra-week or intra-month and making a little extra money. It's realistic to make your yearly salary, so you can level up just by adding this skill to manage the money that you have. Some people, their goal is just to be better stewards over their retirement account. And it's all good, whatever it is, you got to get this knowledge. There's no way to survive in capitalism and not understand how money and the stock market works. It's just not possible, but I don't want to ramble. You got any closing thoughts, brother?
No.
All right. Let me thank people who ride with me. What's up, CC? Haven't seen you. What's up, DJ Naf? Oh man, yeah, we were just kicking it. Man, it's y'all fault. I was over there on DJ Kuda's show. I'll be when I'm watching charts overnight, I'm watching like the foreign like the London session, or watching the futures market or something overnight. And because they on, DJ Kuda have a panel at night, I'll like listen to them. And then as I'm trading and doing stuff, what's up, Raining Woman? What's happening, Raining Woman? Jay Green, thanks for riding. DE, brother DE Raptor. Yeah, DE. Now you see my perspective. Well, we were in a email, discussion a little bit about the markets, and now you see why I'm so pessimistic. We going lower, bro. Hate to break it to you, we going lower. Okay, let's see what else we got here. That's it. OW, the passport, brother. What's happening? I go over there and hang out with with them too. They have interesting conversations, very interesting. I say this, wherever you go in the world, there you are. What you thought and believed when you left the country, because people say, travel can broaden your horizon, but every time I can almost believe that until I think about some of these idiot entertainers who've been around the world several times and they still stupid. So, I think if you were an open-minded kind of person before you left, the travel can do you some good. But if you kind of closed-minded, I think you're gonna look for confirmation for what you believe. You just go keep reproducing stupid. So, but yeah, thank y'all for riding with me. I'm out of here.